Does everybody understand the question? At a double top and everyone is selling, is it ready to drop? No. Why is it not ready to drop? Because I can't get any trade on, right? So what I'm going to try and do is, if everybody's selling, the commercial response would be to do what? Cap the downtick and take it higher into the previous top edges. If everyone pukes their position at the top edges, is it ready to take down, guys? Yes, it is. If everybody's going to puke their positions, what are we going to see in the market delta? Big buy surge, right? So let's investigate whether we see a big buy surge in the market delta just before the big takedown. Let's see if we see the big buy surge in the market delta before the big takedown takes place on bonds. Let's just see if that's even visible, because you've all told me that that's what you would now expect to see. Let's see if you see it. So here's the bond chart. Here's the selling that's all pouring in, right? So if there's all that selling pouring in, yeah, everybody sees what I'm showing. There's all that selling pouring into the deltas. All that selling telling us that this market is going to go up. Yeah? So if that selling starts to pour in here, my job is to cap it and take it up, because all those sellers have stops, right? All those sellers have puke points. All those sellers have thresholds. All those sellers are wrong. So the sellers sell and we go higher. The sellers sell and we go higher again. The sellers sell and we go higher. These sellers aren't pissing off anytime soon, are they? They're a pain in the bloody arse, because we want to be short bonds, but we're taking it higher until these sellers give up. Where do the sellers give up, guys? That's going to be a difficult one to answer, isn't it? Where do the sellers give up? Does everybody agree that the sellers give up right there? Yes or no? So if the sellers give up at that stage, are we ready to mark down the price? Yes or no, guys? Absolutely crystal clear now, isn't it? Do you see where that trade is? Into the top edge of the marketplace. In other words, we draw a straight line. We see the buyers coming in. We see the buyers wipe out all that selling. All the traders just get absolutely annihilated. And then we annihilate the short side of the trade when the buyers come in. We are now going to annihilate the short side of bonds. And this is what an annihilation looks like, guys. This is what an annihilation looks like. All the sellers sold and sold and sold and sold and sold and sold, and they're all making nothing. And we're buying and buying and buying, and we're making money. And as soon as they started to buy, we sold and we sold and we sold and we sold and we sold everything to them. Everything. And then an absolute annihilation for all these idiots that came in on the long side here. And we absolutely destroyed the bond price for $2,000 per contract. It's unbelievable, isn't it, guys? Because it's exactly what we discussed in classroom this morning about rates. But it's not just about the rates anymore, is it? It's not just about the rates anymore, guys, is it? This is the conversation we had this morning. I mean, it's telling you we had this conversation. The guys that were in the room this morning is telling you we had this actual conversation live when we were talking about Fed funds futures. It's not a hindsight conversation. It's a real-time conversation. We were talking about what it's showing now. And then all we've got to then do is find the opportunity where the buyers get jammed and then smash it. And when we smash it in here, we simply then annihilate anybody that's in the long and wrong side of the marketplace. Make a fortune. Absolutely make a fortune, guys. And that's, as I said, when it ties in, it's not just one edge, is it? When that trade ties in, it wasn't just one edge. So we've got the delta edge, which is now visible. We also had this edge, which is the inflation break-evens. But we didn't just have that edge. We also had the tweet from last night, which told you all about the 2s5s curve. The tweet from last night was highlighting the big, massive improvement in our positioning on the 2s5s curve. This is what we were talking about when we talked about the Fed funds, which takes us full circle to this conversation here, where we talked about the 2s5s curve inside of a bracket and then the basis trade, which in this case was the Fed fund futures, which was also in the case we were talking about a rise in interest rates. A rise in interest rates is bearish bonds. A rise in rates is bearish bonds, and that, my friends, was the conversation from 11 o'clock this morning in the London session. That conversation has just paid me $300,000 in profits. You can't make it up, guys. We can't take it back. We can't go back over it, except to do it in hindsight, because we did this in advance. We did all of this in advance. This whole conversation took place at 11 o'clock before that market move. It's crazy. Well, as soon as the bank does a deal,